Here to tell us what is driving commodity prices and why commodities might be a good gauge for what's going on with the trade wars. We're joined by Jeffrey Sherman, the Deputy CIO and Portfolio Manager at DoubleLine Capital with $120 billion in assets under management. Good to have you with us.
Hi, Melissa. Thanks for having me.
There was a time when we would say Dr. Copper all the time. Is copper really the indicator of what is going on globally? Because if so, we might be in trouble. I mean, the metal is at more than one-year lows right now.
Yeah, well, they call him Dr. Copper for a reason. Some people would say that he has an academic PhD in the health of the economy, but I think he's more like a medical doctor. And that perspective being that when you see what copper is signaling, he's signaling there's ailments within the global economy. And this appears to be, at this stage of the cycle, a demand destruction story. And it's centered right around the tariffs and the trade war. As soon as the rhetoric picked up about the trade war over the late spring, you've seen Dr. Copper peak out, drop roughly 20%. And it's really, the volatility is driven by the headline news through the tariffs. And you see today where there's supposed talks between the U.S. and China to discuss how the tariffs will be implemented, what are the extent of this trade war. You're getting a big rebound, not just in Dr. Copper, but the base metals in general. So
are you all
the
going to throw up
metals,
if I say, how do you know Dr. Copper's a man?
I don't know Dr. Copper's a man or a female, so I'm just using it in
the times we're
go ahead.
We've had a lot of sensitivity training here at CNBC.
That was a yellow
very
question.
sensitive.
Yes.
Very sensitive.
Yeah, well, Dr. Copper is sensitive, man or woman. Dr. Copper is very sensitive to the global economy, and regardless of the gender you ascribe to Dr. Copper, it is causing pain within the marketplace. And so what it's signaling is completely different from things you see within the dollar or you see within the U.S. stock market. And we heard a phrase from I heard a phrase from one of my colleagues.
You're saying we should believe that instead of the dollar. Believe copper, not the dollar.
Well, I do believe it's Dr. Copper. The dollar may have a little bit to do with it, but just because the dollar is strong, you got to be careful what you wish for. A strong dollar does not necessitate a strong economy. There's interest rate differentials driving it. This is a tariff policy, which ultimately could lead to inflation. Your intro in this segment was talking about rising prices. That's not good for the consumer unless we have rising wages as well, because
Jeffrey,
that has to put a curtailment on consumption.
What are the extrapolations of this premise then? I mean, if we are to believe that Dr. Copper, whether it be a female or a male, signals, Michelle's laughing. Signals bad things for the global economy. Are the trades long treasury, short emerging market? I mean, where do we go from here?
Well, you can see emerging markets are having pain. I don't think it's just the commodity producers. There's obviously the rhetoric and the headline noise around Turkey, which is facing its own crisis right now. One thing to think about when you think about the currencies is that if you recall last week when President Trump tweeted about the success of implementing more tariffs on Turkey and Erdogan and how weak the lira was in a strong dollar, I'm a little nervous that actually could lead to not just a trade war, but a currency war. If it emboldens the president to go out there and focus on other countries and think tariffs are the solution because you can devalue the currency of its trading partners and ultimately cause them economic pain, that could be a bigger problem overall. So it's not a baseline forecast at this stage. It's something to monitor, though, of a trade war turning into a currency war as well.
Right. What happens if the trade war continues in a prolonged fashion? What happens then to soybean and the other agricultural commodities?
Well, Sir Soybean, so I guess we're giving soybeans a gender title here. But if Sir Soybean is how you're referring to it as, it still has pain here because ultimately we imposed tariffs on China. China retaliated by putting the tariff on soybeans. Right. And then on top of that, you have a record crop that's being produced here in the U.S. If you recall, a few weeks ago, the president also announced he's providing subsidies, I think roughly the tune of $12 billion to U.S. farmers to aid them with some of this pain. He didn't directly attribute to soybean farmers, but it shows that the tariffs are actually having implications there. So Sir Soybean, as you refer to him, is up slightly today, as is the entire commodity complex. But again, there's a lot more pain for Sir Soybean over the near term, given the fact that there's other countries that have a lot of production that can negotiate directly with China.
So how are you positioning your portfolio, Jeffrey? I mean, is the baseline that we're going to see the dollar continue to strengthen and therefore put pressure across a broad swath of commodities? How are you allocating your portfolio right now?
Yeah, so when you think about the implications of the dollar, I mean, we want to look at the bond market, first of all. I think the last time my boss, Jeffrey Gundlach, was on TV, the 10-year was trading roughly at 2.87%. Right before I came on, the 10-year Treasury was trading at 2.87, I think it was 5% at the end of that. So the Treasury market's done absolutely nothing during this trade war. It's had a little bit of volatility, but I think you got to look at the rates market to really think about the direction of the dollar. And so I think of this as a tale of four markets right now. The commodities market is suffering. Because, again, that's a direct implication of slowdown of global growth. The Treasury market is just muddling along. It's range-bound. You have push and pull dynamics that are keeping it there. And then you have the dollar, which has accelerated, but not really in a major fashion. The one thing that is kind of the outlier here that is sloughing off, or shrugging off, I should say, the trade war is the U.S. stock market. U.S. stock market is very near the highs once again, and it's ignoring it. There's this idea of decoupling of the U.S. market, and we know this is a very well-linked global economy. So there is a disconnect between markets. The commodities are typically the first to react. Again, this is all about the trade war. So if this is just rhetoric and the president walks us back, we have negotiations, we can see a huge rebound in commodities at this stage. So again, it's too early to tell. We continue to monitor it. There's already been pain in the space, and so we're not changing our view on commodities at this stage because, again, we're trying to assess the probabilities of trade war. So we still like the complex.
Okay, Jeffrey, thank you. Jeffrey Sherman, DoubleLine.
Thanks for having me.